What's up, traders? I got another momentum setup that is one of my favorites, and inside this video I'm going to tell you exactly how to enter from it, recognize it, and manage your risk to reward along the way. Let's get going. Let's show you what it is, the 4-bar play. All I ask is you subscribe, like this current video, because we're out here putting killer content out every single week for you guys to become better. So today we're talking about the 4-bar play and why it's one of the best times to get in with momentum and one of the perfect opportunities out there. Most people will be full-time 3 to 4-bar play traders, and you guys can be too if you understand what's going to happen inside this video. So I'm not a financial advisor. This isn't financial advice, but let's get into the 4-bar play. So again, all we look for in the market is the move. And once we see the move, we want to get in on the consolidation. That's every single video I have made on this channel, is how to get in on consolidation, how to recognize the move, and how to find that moment. So this is another opportunity for you guys. You have the move, and once you have the move, most traders are going against it. They're trying to play puts. They're trying to short this move. That's the wrong opportunity. Everybody should be going with the move. It's the most beginner mistake to go against the move. So again, beginner mistakes, top books, free courses, link in the bio. 7 days totally free, trade with me. Link in the bio. Would love to have you. But again, beginner mistake, going against the move. Advanced mistake, trying to go with it. So let's show you how to do that. So first off, I'm going to add this thing called the ATR. It's called the average true range, and it's basically the average the bar can move at the current moment. So if we have the candlesticks on here, they can move a certain amount based on statistics and based off the average of the past. So if we know the ATR of the current bar, we know that the next bar that ran, this huge bar here, we know if this is the bar we want to get in on. We always want to be taking 3 and 4 bar play moves when we get that huge spike. And we want to make sure that spike is 2 to 3 or even 4 times the ATR. So let's show you what we're talking about. So right about here, I'll pinpoint this one out for you. Let's do price label. The bar before we broke out, we were around 9.35 ATR. So the candlestick that moved after this ATR reading was about 33. So that's about a 4 times move ATR. So we know it's an anomaly move. We know it's a momentum play. So when you get a big bar like that, you know there's probably going to be continuation. And the more percentage it is, the more multiple it is of this ATR, the higher likelihood chance we have of getting that inside candle and then the continuation. Because what the market makers do is they're going to pop this thing up hard, and then they're going to consolidate it, trap all those sellers in, and then boom, push it again, get those shorts to cover, and it has that huge momentum run. So again, we want to have an ATR 4 times the current one on that bar. So that's the first criteria of the 4-bar play. As you can see right here, 9.3, this current bar is a $33 move. So we want something breaking out from the current range. You can see in the past, this was consolidation. There's the breakout bar. If we look at the ATR right here before the breakout, it was a little bit smaller at about 8.4. So this is not a 4 times bar, but it's still very large. That's 12, let's call it 13. So almost a 2 times ATR move. And we followed up the next day with another 2 times ATR move. So that was not something I would want to enter off of, but a 2 times move is good enough for some traders. So again, you can see ATR was low, we consolidated, and we finally broke out. You want to follow breakouts with continuation, and the larger the breakout, the higher chance we have of continuing. So again, right here, you can see consolidation, 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 right to my trend line, honestly, and then breakout with massive ATR move. If we go back in the past here, a lot of moments that Square did this. So Square is just a prime example of something that breaks through the ATR and makes new huge bars that we can play off of. So you can see in the past, broke through here, broke through here, broke through here. But here's the largest candle, and here's the one I specifically want to try to enter off of. and let's talk about it some more, talk about the pros and cons and how to look at this move. So I'm going to just draw out a 4-bar play, and you can look at the one above and you can see the differences of what is ideal and what sometimes happens. So here's the first bar. Let's say it's a green bar and we're going over, cracking over resistance, moving to all-time highs, moving to the high of the week, high of the day, and we want to make sure ATR is high. So your very first bar, let's say that's the length of it. What you want to happen is you do not want to consolidate or retrace more than half of the bar. So half of this bar is going to be around there. So the very next couple candles, we do not want to push through half of the bar. So if we go down here, that's not a 4 or 3 bar play. It could be, but for me personally, if something moved $33 and it retraced 20 or 30 of those dollars, I would not have high conviction it's going to continue. I want to get into high conviction plays, and those plays look like that. So this is ideal. You're looking for the market to make a higher low and an equal high. That's exactly what we look for with an inside candle as well. These are just inside candle plays, just specifically made for continuation. So the fourth bar, what we look for is hopefully a higher low and an equal high yet again. This is the ideal 4-bar play. Please take note. This doesn't happen all the time, as you can see from this setup up here. But what you do not want to happen, I'll repeat this again, you do not want to retrace more than half of this candle. That first candle, it's super important. It sets the range, sets the tone. If you're going to retrace too much of it, this is not setting up nicely. So after this third bar, here's the fun. We just need to run and we need to go over the high, because this is going to be our 1, 2, 3, our fourth touch of this level. So when you touch a level 3 to 4 times, it has a much higher chance of breaking out. And what we see in the market is the same move happening, same size. So for this first bar, we're probably going to see another bar the exact same size. So $33 for square. The next bar is probably going to be $30 as well. And you see it's happening pretty much like that on this chart I'm showing you, as well as the opportune example right here. So here is the 4-bar play. The 3-bar play is just missing one of these inside bars, but that's okay. It's not rocket science, guys. You can have that as your 3-bar play. You can have that as your 3-bar play. You don't have to run and break out over the highs right away. What you could do is have a wick that forms, and I'll just draw this as the wick. Maybe the wick comes down in the morning and retest the low of the prior move. Maybe each one of these candles has a wick that comes down. It does not matter where the wick is most of the time. All that matters is where the candle body ends up. If the candle body is above the 50% retracement mark, we're good to go. If the wick is below it, that is still fine in my opinion. You see the candle here, although we might have retraced this whole candle, because we broke out, we formed a wick. This tells me that it didn't matter. This is price action that didn't really matter for that day. So again, wicks could be there, they could not be there. I want you to take a mental snapshot of the 4-bar play right here, because this is basically what it looks like on every setup if you're looking for it. This is basically, again, a bull flag making higher lows and equal highs, and then the breakout candle over the high, the fourth touch, the third touch, all the goodies. And you can see again, higher lows, higher lows, higher lows. That's what we want for a trending move. Higher lows, baby, and then eventually higher highs come in. So there's that consolidation and there's that breakout. So again, we want to set our stop loss at the 50% mark. This is important because if we cross through that, let's say on the third bar, that's going to be engulfing. That's not good. I do not want this to engulf. If it engulfs, it's going to reverse, probably engulf both candles. So be very careful if you see an engulfing bar on the third candle. If we set our stop loss below there and bounce, perfect. That's the ideal scenario. We come down to the 50% retracement twice and we reject it. But ideally, you make that higher low and then you run to the highs on the next candle. This candle right here, you could also set your stop loss at the 50% retracement, or you could put your stop loss right here at the low of the prior candle. What you want to do is, again, respect your stop loss, because if you do break that low, engulfing candle on 1, if you break the next one, engulfing candle on 2, if you break the next one, engulfing candle on 3, that looks like a scary, scary candle. If you reduce the height, this is reversing everything. So this is a bull flag that failed. There are setups in the market that are great and probably work out 90% of the time, but they can still fail. So I'm just going to show you the opportunities as well as the risk levels and where you should be looking to set them. And so when the play happens, you're not confused why it broke this and why it broke that and why it didn't work out. So again, those 3 bars, we're just going to take them out and we're going to dissect the play in front of us. Actually, we'll keep these in and we'll just move them up here so you can reference it in the future. So these are the 4-bar play, and you can see again, we just want to have the breakout over the high, and that's where we enter. We're exiting at the top of the ATR move for the first candle, but we're entering within these 2 candles. So you can enter on these 2 candles. You can enter at the low at the 50% retracement. You can enter at the smallest level you can get into on this day, or you can enter on the breakout. So it's up to you. There's always more risk in getting into anything pre-breakout. Getting into anything post-breakout, there's a risk as well, because you can get stopped out in a winning play if it retraces, comes back down too much. If you have your time frame too short, your expiration date too short, maybe you don't put enough days on this, you have 0 days, the next day it breaks out, this current day consolidates. Be careful your time frame as well. But let's dissect the chart and let's see how close this is to an ideal 4-bar play. And I wanted to do a 3-bar play video, but I saw Square making just the perfect 4-bar plays everywhere. So here's the ATR move. It's 4 times like we've been saying. And if we go sideways, what you're going to see is the 50% retracement pretty much right at the candle wicks. So the bodies are coming down, and then we have the wicks not forming any bodies underneath the 50% retracement. So tons of buyers pushing price over this. Like I said, if you come through the 50% mark, that's okay, as long as we come back over it later in the day or whatever time frame you're looking at. This works on every time frame, the 4, the minute, the 30-second, the weekly, the monthly, the yearly. Well, you always want to make sure that you close above the 50% retracement. But this is the problem of getting in and having such a tight stop loss at this level, because if the day just could come down and just not hold it and then comes back over, you get stopped out in a winning play. So again, we have that inside candle. This isn't retracing more than 50%. It is perfect. What we want to do is draw the highs right here. All you're looking to do is get in at the 50% retracement, or get in when you engulf. There's a lot of other places you can engulf this current candle here, engulf this current candle here, but basically you want to get in over here or up here. So here's your 2 places to possibly enter Square for a 4-bar play setup. And you can see that the ATR of the next candle is $24. So if we're looking at the 2 candles, this candle to the height was 33, this candle to the body was 24. So you can go by the candle body, you can go by the candle wick, but like I've been saying, wicks don't matter, bodies do. If you looked at the body move, this is 24. The $24 move was exactly what happened to the penny on this day, and then it sold off. So again, if you had your profit orders up there, you scaled out along the way, you wouldn't have been waiting for 30, 40, 50 to hit. You would have been like, wow, this is the max move. I'm pretty dang lucky it happened for that next candle. I'm out. And so that the next day inside candle doesn't look good from here. So here's that inside candle that retests the levels, doesn't break out on the 3rd bar, makes you wait an extra day, but boom, the very next day after that, this candle runs for the same exact body length the previous candle. So that's the 3-bar play. I'm just going to show you one more quick example, or sorry, the 4-bar play, one more quick example, but again, these have major potential, as you're seeing. That candle was 2,000% with the weeklies on Square. The monthlies were 300%. 6 months out were about 100. That was an insane move, and you could have been patient getting in on either one of those candles. And like I was saying, Square makes a bunch of 4-bar plays. It's honestly pretty shocking. So here's another great one. I'll give you a second to see if you can spot it. You should be pretty good at this by now, but here's the 3 bars, and then there's the breakout 4th bar. This one looks a little different. That's why I want to go over it. Teach you how to recognize something that doesn't fit the textbook. So ATR, we pop this bad boy up. Let's just throw up the ATR on the bottom before the breakout candle. So right here, ATR was about 10, and the move here was about 20. So we got a 2 times ATR. That's kind of the minimum I would ever get into a 3-bar play. 2 times ATR. This is the second time we've seen a 2 times ATR. And what we want to do is, once we have this candle, start finding our entry points, start looking for the breakout zone. So again, over the wick is considered breakout. Just because wicks don't matter doesn't mean we shouldn't set our entry points over them. You know, candle bodies are great, but breaking the wick on an all-time high runner is important too, because there is some sellers up there. The wick does mean there's sellers there, and so we do want to set our entry point over the wick. You can set it over the body if you want, but these 2 candles did not clear the bodies, and they wicked out, so they would have been bad entry points for you. You could have gotten stopped out on this candle too. But if we go 50% retracement, we just want to know where our entry point is. And I'm going to mark this out. This is going to be right about here. So this is our safe entry point. And for this to be an ideal 4-bar play, we want to make sure we're making higher lows. So you do see the wicks. The wicks are going higher. So there's a higher wick. Oh, switch it to let's go to an arrow. This wick is higher than this wick. So this is called a higher low. The candle body is also higher. The very next candle, we see a higher wick and a higher body close. Although it's red, we really don't care. Those are higher lows producing in this move. And again, you can just wait for the breakout and clear. It's just tough to know if it's going to wick out or not. You want to wait for that body breakout, and then lastly that wick breakout. So there's 2 levels you could get in on. It's up to you to figure that out. But this is the 3-bar play right here. Setting your stop loss a decent amount lower than the 50% retracement probably would be fine. If you got in right at this level, you could set your stop loss maybe at the low of this day. The second bar is a great bar to put your stop loss on if you wait the whole day to see if it breaks or not. So here's the low of the day. If you set your stop loss on this move, you might have got stopped out depending on how tight it was, but that's a great place for a stop loss as well. And we want to teach risk management so you're not just throwing money away and, just confused why it's not coming back to you. So again, that was a 20-point bar. That's our profit target for the breakout. So if we're looking towards this breakout bar, we'll go from the candle body. Like I said, candle bodies matter most. The very first move here was $8. Very next candle makes it 13, and then the height of this candle here makes it about 20. So that was the exact move of the first candle, just broken up in 3. So it wasn't the ideal 4 bars, but you can see right here, this setup adjusts and it can be shown in different ways. And I just want to show you this one example because it wasn't textbook, but if most people are A plus B equals C traders, they're going to be in the garbage can real soon. You have to adjust and adapt to the market conditions. Like I said, guys, free books, free courses, link in the bio. Would love to have you check them out. Free trading 7 days in the link in the bio too. That's all I got. If you want to see a playlist on all my charting, all my trading videos, check it out in the video to me. Have a great day, traders, and peace out.